Okay, so in this video, what I'm going to do is take you through one topic of the weekly macro themes report. This is my flagship weekly report. Cover, as you can see there, 5 different topics each week. Some pretty interesting ones overall in this edition, actually. But we'll focus here on number 3, US IPO trends. So there's quite a few interesting things to talk about in this one, actually. So first of all, at a really high level, there's the sort of cyclical market timing aspect. There's the structural view. There's the trend of IPOs with negative earnings. And then there's foreign company IPOs and listed companies versus investment funds. So there's quite a few things to talk about here. We'll start with the first two. What I've got on the left there is IPO filings. So this is monthly filings and withdrawals. And you can see that it's very pro-cyclical with the market. When volatility goes up and markets goes down, IPO volume tends to drop off in that sense. And also actually too, when the valuations are getting up there and people are getting excited about the market, obviously that's the time to go and do an IPO. And you can see there that from a market timing standpoint, the dips or the troughs in filings tend to coincide with the troughs in the market, and likewise peaks oftentimes come pretty close to market tops as well. So, you know, I guess you would add IPO volume to your list of things alongside valuation and technicals and monetary conditions, etc. But zooming out to the longer term view, so this is showing the monthly number of IPOs across from 1960 to 2020 there, and you can see again, overall there's this sort of cyclical impulse going on there, but probably what's most interesting about this is how, you had sort of this golden age of IPOs in the 80s and 90s. It's sort of, there was a kind of an uptrend in IPOs around that period, and then since then there's been a downtrend in IPOs, and a few things can sort of explain that. So if you think about like maybe the pace of sort of radical innovation has kind of dropped off in some ways, or at least capital intensive innovation. I mean, if you look at a lot of the innovation nowadays, it's software, or it's sort of services. It's things that people can do on a bootstrap, on a shoestring budget. They can get those sort of up and running without necessarily needing to go and raise large amounts of capital. There's also a lot of M&A activity, so a lot of times you see like Instagram getting taken over, so things getting sort of taken over, I guess, before they might necessarily have made it to the market otherwise, and I guess a lot more venture capital and private equity funds chasing after deal flow, and that's probably one of the also regulations, of course. Regulations have made it a lot more difficult and onerous to go through the whole process. But if you think about these last 2 decades have really been the golden age for raising AUM for venture capital and private equity. You know, um, listed assets have been quite volatile, and certainly if you looked for that period from 2000 to sort of like 2014 there, where that you had that period where over that 10-year period markets kind of actually just went sideways if you kind of close your eyes. Of course, big swings throughout, and then also where bond yields are at. I guess there's this growing consensus or idea that looking forward, the traditional assets, the traditional liquid assets, equities and bonds are going to produce lower returns, and so therefore that the private equity venture capital crowd have used that as a good kind of selling point to get money going into that. And you definitely have seen a lot of large allocators starting up alternative programs going into definitely private equity and venture capital, also hedge funds as well. Different topic for a different day. So and as a result of that, those guys are definitely going to be snapping up, or, the venture capital is going to be filling some of the role that the IPO, the early stage IPO would be taking, and then the private equity guys would be, providing that source of buying flow on the, on the cashing outs kind of side of things, or um, trying to make them more efficient, kind of thing. But that's that one. And the other interesting set of charts here is, first of all, this one here. This one was quite a infamous chart, making the rounds a lot for the last couple of years, given that it reached the same levels as dot-com boom there. So it's the proportion of companies that have done their IPO who either didn't have earnings or had negative earnings. And if you look at the top here, on the top right here, this chart shows you the breakdown. So for biotech IPOs, it's more the rule than the exception that they would be going to market with not, with negative earnings, and that kind of makes sense. Most of them are, trying to raise funds to help get through their R&D programs. Tech is a bit of a mixed thing there, but for the most part, tech IPOs have tended to be, up there as well. But also, if you look at the other, all other companies, there has been that gradual upward trend to, more loss-making companies. I guess you could also say maybe less mature companies as well. Um, and again, probably some of those ones that have got, you know, established reliable cash flows and revenues, ones that are more easy to financially model and load up with debt, will be getting eaten up by those private equity ones that I mentioned before. So, but yeah, and if you look at the IPO sector representation, you can see that biotech has gone from, you know, kind of an also ran to actually the lead player, just by a slim margin. And I think this is kind of an interesting idea to think about. And one of the growing list of potential pandemic side effects or pandemic persistencies, things that's going to change, but we might actually see more and more of biotech, sort of accelerating. It might be one of those things that helps accelerate it as people become, even more conscious about health, and more money goes into vaccines. Perhaps it's sort of shining a light on this sector, perhaps more than usual. And there's a lot of really interesting emerging research technologies in that field. CRISPR, things like that, that have kind of, and combining with you know compounding growth of technologies, really could set the scene for something more interesting there going forward. But that's not all that's going on that's interesting. Probably the last chart to talk about is one of the most controversial ones, and that's the percentage of companies IPOing in America that were foreign. Foreign, ooh. And so you can see here it's running at about 30%, so almost one in three companies that listed were a foreign company. And you can see there in the black is China, which that is probably going to disappear. At least should Trump be re-elected, we'll probably will not see any China IPOs for some time, because the relations there are steadily declining from bad to worse, which is pretty concerning, really. But it's certainly an interesting chart to think about in the current geopolitical backdrop. And then lastly, there is the number of listed IPOs. Of course, those trends that I talked about, less companies going to market, more involvement of PE, VC, and all the other issues in the background, means a smaller number of listed companies, well, actually, to be more accurate, a steady state of small amount of companies. And you can see there in the blue line is the number of US equity investment funds. So I'll just read out the star there. So it's the total number of mutual funds, exchange traded funds, and closed end funds, which are primarily focused on the US market. And so you can see that there's just about as many funds investing in the companies as there are companies themselves. You could almost have one fund, one company, but it's obviously a bit more complicated than that. So look, those are an interesting set of charts if you thought those were interesting, or if you had any different takes, definitely let me know in the comments. And if you wanted to receive this report on an ongoing basis, we'll jump back to the start. Definitely get in touch and we can set something up.